All right, good evening, guys. Ken at Tortoise Capital. This is the Foundation's Q&A for March 22nd, 2024. So Jonathan asks, there is a line between choking off a trade with an early exit and giving it room to work versus giving it room to work, but taking more of a loss by doing that, especially with SSCs and COTA 2s. And when you look at my trades on the daily report, I seem to have a knack for being able to walk that line. Are there any rules of thumb or guidance that we could use for that? So I'm going to cover these items over here. Then we're going to take a look at yesterday's chart and see if there's things that jump out at us. One of the things that I'm going to say right off the bat is that, when you enter here, and your initial risk is probably to the PSAR here, and then you exit at this level, that's what gives you the minus 0.67. And then 2 bars later, we've re-entered, and then we're taking the PSAR exit here for 0.72. So we've taken 2 partial losses for minus 1.35. Whereas if we respect that first 1R, this thing actually gets in the money here and then comes back. And then even if you exit at the VWAP, you end up, by giving it the wider stop and demanding to see the price that invalidates the move, you actually take 1 trade instead of 2, and that 1 trade probably equals a scratch. Whereas 2 trades with an aggressive exit, I think both of those are, no, this one's probably, in the, taking it at the PSAR is probably all right. But those 2 exits give you a minus 1.35. So it's not necessarily the case that giving it more room to work means that you're going to take more of a loss. Yeah, it might have meant that on here, but it's not unusual that if we're trading frequently, that you start getting multiple partials that leads up to longer losing streaks. And it gets back to the whole idea that in every trade, there's a setup that gave us a reason to believe that we had a 2-to-1 reward to risk, and that there is some price down here which invalidates the trade, which I then say you should set that equal to a 0.6 R loss for position sizing, which means that you have to see, you still have to see 2 units of gain to justify taking that. But if you just say, hey, look, this was going to be a 0.6 loss anyway, then you would not have gotten out here. So there's something to that this is, on the surface, it looks like giving it more room to work means taking a bigger loss, but maybe not when you take a look at the frequency of trading. On the other hand, if I've got this trade and it's supposed to work, but it doesn't, so I take that exit, and then it immediately reverses. So I get in like I probably should. I'll ask you, what is that pattern? Is it a COTA 2? Well, there's actually an emerging dragon where you're getting long here instead of here. So in one sense, that's actually, this feels like I had to get in because it broke above, and I have fear of missing out. Whereas if you're trading a specific pattern, that pattern right there is a kata 2. But then on the second exit where you get out here, now I've had two patterns that are supposed to work. It didn't. And now right here, it has crossed through the VWAP. That's two negative trades to the upside and it crossed the VWAP. I can be short right there. And now suddenly this trade looks like this. And now I get my exit where I'm supposed to, which is when the R10 rolls over, I take it at the skin of the dragon. And now I make that much instead of scratching. So part of what I want to say is precision in the pattern. Check or hold.
No, that makes sense. The pattern showed earlier, and I waited, and I just needed to go ahead and take it.
Yeah.
Sometimes with like a kata 2 or an SSC, I mean, you'll cut it really quick. I mean, you'll say it's not working.
And I made a stream of consciousness self-check of what's the first thing that's always on my mind. And it starts, and it's really pretty much in this sequence. And I'm going to say, remember that what I'm trying to trade are things that are in a compound critical state. And so they're supposed to, when they've come into this tiny little doji box, whatever, and it breaks out, it's supposed to go right like a freaking jack in the box is supposed to go boing. And the longer it takes to do that, like I don't even mind this. I consider kind of front running instead of taking this exit like I was saying. I actually don't mind that because you took the PSAR exit. That's fine. Like it had 7 bars to make that move to get back to here. We think it's going to get to here or here. That's where it's supposed to go. And it'd be nice if it could do that in a 45-degree angle, but it didn't. It did this. I don't mind you cutting it right there. And that's 0.7. And this would have been 1.0. I don't mind that exit at all. I think that's fine. And remember, if you'd set that equal to 0.6, then this would have been technically about a 0.42. But the point is that that's still, you can't really cut it any closer than that. And where I would begin to be concerned is the fact that this did not fail further. It did not fail further, but immediately kind of reversed back up. When this kind of clears right here, I could see you getting long here. So this isn't bad.
Okay.
And then that thing rolls over right away. Like it's supposed to go and it didn't. And you've already got the Bollinger Bands compressing. That's even more reason. That's still not bad. I might take it at the VWAP, so maybe a couple pennies higher. That's about as good as that was going to be.
Yeah.
And all you needed was one move that was like this or like this to have more than compensated for perfect execution in there. So there's something in there to think about. Now, as I was going through the things that matter the most to me, I kind of thought, hey, I'm thinking about this one. This was EWW, well-known frog champion. So that's good. I don't even have it on there, but it should be on there. The size of the gap and the immediate response. That because that's going to tell me, if this was the close and then this is the open, the size of that gap is supposed to tell me something about the size of follow through So hopefully the target that I'm trading is something that had one of the larger gaps. And then right after the gap, what was the immediate response? Does it look like it's in play right from the opening? Now I'm trying to see where, I think this is where it opened.
Yeah, it really wasn't a gap. It just had a kind
Yeah,
of a
this
crazy
is where it
handle.
opened right here.
I think so, yes.
Yeah. So there wasn't any extra reason for this to be
Right.
compelling. So
Right.
so yeah, could it take this long to get it going? Yeah, okay. That's still kind of noise, not much to worry about. If it had been a big gap, then I would have been as fast or faster on cutting it. Like if it was a really big gap and it just did this sideways crap, then that's weird and that ain't supposed to happen. So I'm ready to get out.
Would you not trade it from the open when it's something like
Oh,
that?
sure.
You
Yeah.
would trade. Okay.
Yeah.
Okay.
Yeah. If it's a big, like if it closed here and then opened here and I've got my little R10 boxes on it, as soon as it breaks out from, I'm not even waiting for the OR3. I'm ready to take it either way with a stop probably right here where it opened. And then I have one risk box in either direction and I take the first breakout.
Chart,
And,
it
and
really wasn't a gap at all. It had a wild price range, but it didn't gap.
yeah,
So maybe
so maybe this is one
one
that
not.
it's going to, so I probably stay in the slow mover a little longer. That's where I think,
Okay.
hey, the
I see.
PSAR is fine because
Okay.
you've given it this much time to move and it didn't. So failure to follow through is information. That's a good exit.
Okay.
But if it was a bigger gap, I would expect it to go sooner and maybe, I don't know. I might stay longer because it's still supposed to go. Let's go. Maybe I stay longer and honor the initial stop wherever it was and give it an R10. And that way I'm maxing out a loss at an R10. I would
Okay.
probably, if it's a bigger gap, just have the initial stop in and leave it sideways. And then I'm either going to take an R10 loss or eventually it's going to go. So I don't time myself out of it.
Okay.
Because I want to be in it because it has a large gap, then I probably just use the initial stop and leave it alone. And say fish or cut bait. Let's go. Now, later on during the day, I'm thinking about where am I inside the 1-day NDX and within the range stat framework. So I've got the open. So then I know that I have a maximum R stat up here and a minimum R stat down there. And now I'm looking at where the price is. How much room do I have in either direction? And then where am I in the compared to the high of the day versus the low of the day? If I'm up in here, I'm at the high of the day, I'm at 100, then yeah, I think it can go. And then I know I can still go that far. But if it was this and then came down into here and I'm testing the low of the day, I'm probably getting out because it's supposed to go and it didn't. And now all it has to do is break from the low of the day. And now the sellers are really in charge. And then especially if this was a gap, like if this is where it closed and this is where it opened and it had some little half-ass move here and now it's drifted down. Yeah, I'm getting out there. Because if this breaks, that's a fast move. And because I want to be short that. So that's a case where I might get out sooner rather than later. If there was no gap, then maybe I can hold it a little bit longer. So I'm looking at where is it inside the range stat framework? Like what's the continuously updated reward and risk ratio that it's in? Where is it near the high of the day or low of the day? Where is it compared to the 10-day NDX? If I know this was one of those things that was way down in here and it's trying to go long, maybe I give it a little more time to find its legs and go, because it has to overcome all the negative emotion. But then if it does start drifting down near that resistance level, then I can't let it go any lower, and maybe I cut it so that I can be ready to go short. So I'm trying to get a sense of where is the path of least and most pain for this thing? Where's it gonna
Okay.
where is it gonna surprise people? How much latent surprise is inside it? So I think about those kinds of things.
When you say
I-
10-day NDX, are you talking, you're primarily looking at the 10-day low, 10-day high and 10-day
Yeah.
low?
So the
The price
10-day
of that.
low
Okay,
is 0 and the 10-day high is 100. So we just call that the NDX
make
as
sure I
the
got that.
index. So on the 10-day, my daily range might just be in here. And if this thing is in the middle of a 10-day range, then there's no urgency in it. And it's just drifting around. It's not likely to make a sharp move. But if it had started the day near the 10-day low and is trying to grind up, I still think there's potential in it. And I want to give it a little more chance to go.
Okay.
Market condition, sector condition, and peer condition. Now, this is part of where it's the context. I have this trade, this trade is in context to what it's doing. But what's the market sector and its peers doing? So those are the other things that are on my radar screen. Hey, this thing is just drifting sideways while these other things were going down, and I'm long this thing. And now I see the market is bottoming out and getting ready to reverse, and this is getting ready to reverse, and the other peers are getting ready to reverse. Well, this thing was never failing, and it may be that when the sellers stop, then there's going to be buying action, and buying action in all of those is going to contribute to this thing getting ready to go. So I can kind of use these other gauges to anticipate what the next 5 to 10 bars of this could be based on hydraulics, or if I can say it that way. What is their money flow doing that might be carried over into my target? So that's what I mean by market sector and peer. And then just compared to the other choices that I have. So I've marked up some other compound critical state things. And if I had 3 of them, and this one is just monkeying around, this one is going, and this one's doing nothing at all. It's about 5 bars away from hitting an entry. Hey, maybe I just say, screw this, and let me put that money into this one. And go for the one that's actually moving in my favor. And that way I can concentrate my capital on the mover. So that's why I kind of like to have some kind of span of control that I can monitor and then get my capital on the horse that's running. So again, that's a case where it's not just what's on this chart, but it's what some other candidates in the market are doing. Where it is during time of day. And again, I look at that first 30 minutes. There's that 90 minutes of lunch. And then there's the last 30 minutes. Those are all specials that price behaves in a different way. And what that leaves is a 2-hour session in here where it can make a move intraday for routine buying and selling. And then this is the one where I expect the main move to occur. And it would be nice if I saw something that got started from the open and made a big, bold move. And then here it just keeps going and then levels off at lunchtime and then maybe gives half of it back during the afternoon session. So this is like the second big move because I got 2 hours. if I'm trading during lunch when things are very quiet, maybe I'm not using the PSAR because it's so close. There's not really a signal in there. So whatever, if I got long right here, I might just keep the original stop and not use the PSAR. If it's in this segment right here where it's moving, then I can, and maybe I can get long here and it's going, then I can use the PSAR. So sometimes I'll use the PSAR, sometimes I won't. And so time of day can have an impact there. I would then say with MACD Four Seasons and its Z-score relative to the Red River, I love this entry right here. Because you were just in the spring after a significant move down, because you're out of the Red River. Winter has turned to spring. You got all of the Red River to cross on a normal behavior. So this is kind of optimum time that we have a realistic expectation it could get to here. How fast can it get there? It's supposed to go fast. This was not very fast. This one over here, I like that as a short. You had a spring, a winter. It hit the top of the Red River and is rolling over pretty quick. That's a pretty good short. And then I might take a look at the top of the dragon or at least the PSAR, or I'm sorry, the VWAP, and say, that's the cap. Now it turns out that that would have ticked us out, but you know, with an entry here and with this as your stop, you had a lot of time to let it try to fail that would not have triggered an exit except for that one piece right there. So I can look at the MACD Four Seasons in the Z-score. How wide is that Red River? If the Red River is wide, that means the preceding price action was pretty volatile. It went from here to here and then back down to here and then up to there. That generates a pretty wide Red River. Over in here, that price action is really compressed. So I don't even know if I want to trade inside this area because you're getting PSAR flips and turnings in the RL10, but this thing is really abnormally quiet.
Yeah.
So I got to really wait for it to break below this Z3 line and maybe the VWAP. Maybe that's what my breakout channel is. Like I'd be willing to take a breakout from here. I'd be willing to take that as a trade. And I don't want to wait for that long. But on the downside, I probably want to wait for this line to break out. So my channel would be something like that.
Okay.
Length of the PSAR chain. So and one of the reasons I kind of like this one is you got your entry, but from the PSAR flip, you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You gave it plenty of time. If it was going to move, that had 10 bars to make that move, and it didn't. So that feels like a good exit to me. And then this one, 1, 2, 3, 4, 5, 6, 7. Yeah, it had 7 bars to make the big move down, and that scratch is fine. 7 bars, you should have been able to go and break through this Z3. It didn't. It reversed off of that and came back up. That's a great scratch. So in some ways, the PSAR will tell you where you are in the life cycle of the move. The idea of legs is I might be thinking about, the thing settles into a little doji. I get the breakout and it goes leg 1, pause, leg 2. On this one, the RL30 probably is getting flat. So I might say legs plus RL30 slope. When the RL30 rolls over, that thing is probably done. So you could tighten up your stop here. Whereas on this one, you might give it a little more room because it's still in the early days of the first leg. And this thing is still showing some longer term strength. So I think that's why, to me, at the end of leg 2 is probably all I can take. Now, what that means is that I can actually see a nice leg 1. And then if this little move up comes back and then is a quick kata 2, like the shorter the time frame before it starts rolling up again, the more I want to take it. Or if this got me out, I want to re-enter quickly. But then at the end of the second leg up and it starts rolling over, now you'll always notice the RL30 starts to decay because you have this period of weakness and that period of weakness, and now the RL30 will roll over. So I see leg 1, I plan for leg 2, I hope for leg 3. Yeah, maybe I can get this trade, maybe not, but I should be able to get the second one as a kata 2. The faster it reverts back into a kata 2, the more I want to take it. And then it should work right away. Conversely, the longer it took to roll over and then start to go again, that's probably not even a kata 2. That's probably just a consolidation. And then there's probably a logical break between the emotions of this trade. If the emotion was still running high, you'd expect this thing to go right away or to fail immediately. It didn't. It just, end of story, brand new chapter. Treat that as a separate trade. It doesn't really inherit the power of that to move it up. I would say this one, on the urgency of the compound critical state, I would just say this kind of comes back to the relative strength versus other compound critical state targets. Of all the ones that I've prepared, which one is closer to being on fire and moving? And I want to try to keep getting my capital on the 1, 2, or 3 things that are moving the best. So if I see a chance, if I was down on this one because that fired and then it didn't follow through, maybe it's just better to cut it instead of trying to make it work and then get that money onto the thing that's really working. So there's some of that. So that's kind of what I want to say on this. Now, on this particular trade, I think that was fine. This was just one of those where a frog champion, EWW, did not trend directionally during that day. It just didn't do it. You took a couple, 2 or 3 shots. Yeah, it was minus 1.3 with maybe slightly attention, a little more attention to detail. It might have been -1 or minus 0.5 or something like that. But still, that's not too bad.
Okay.
On days when EWW works, it's going to work bigger than today. It just didn't work today.
Okay. Well, it sounds like with the improvements that you mentioned, but my technique wasn't too terrible. It just didn't cooperate.
Yeah, that's the way I would look at that.
Okay. Okay.
All right, that's about everything I wanted to cover tonight. I got to get some work cranked out here for we're going to go at 8:30 for the nightly report. I'm moving that up to 8:30 from 9:30, so I need to get some stuff cranking.
Appreciate it, Ken. Thank you.
Last chat, we'll do a quick one around the horn. Any burning urgency from Brian or Kevin or Joe? If Joe's still in here. No, he's not in.
I'm good, Ken.
Okay. Good to see you, buddy. And keep marching, Kevin.
Thanks.
All right, take good care, guys. See you, some of you shortly.
See you.